Hello and welcome again to Money Tips. This is Charles Kelly, author of the book Yes, Money Can Buy You Happiness, and former financial advisor working for banks, insurance companies, and other financial institutions, including my own company, for over 25 years. Now, recently I was talking about a challenger bank called Monzo that I found very useful because they send you a message every time you spend something. So you go and you tap it into a coffee shop, you immediately get a message saying you've spent £3. So and it gives you a good reporting system so you can track your money immediately. And if you've got direct debits and recurring payments going out, you get a reminder of that money as it's going out, which is good because sometimes you forget about things. But another challenger bank today has announced that it is shutting all UK accounts, which is about 200 accounts, and they're called N26, which sounds a bit like a postcode, London N26, but it's not. It's a bank with branches in Germany and apparently opening up in America, and they blamed the system on the withdrawal agreement, on the EU withdrawal agreement, which I don't know what the hell that has got to do with anything. If you're offering bank accounts in the UK, why would a bank close down because of the withdrawal agreement, which hasn't even happened yet? So it's a bit of nonsense, really. But they're closing down. If you've got an account with them, it won't be a problem. It just means you move your money from them to somebody else. And other challenger banks like Monzo and Starling Bank have UK banking licenses, unlike N26, and they're going to continue. I think they're doing very well. But it does bring up the question of a lot of these smaller banks and other types of quasi-banks are springing up. And someone has warned that could cause a financial difficulty in the market because there's a lot of funds, organisations like hedge funds, peer-to-peer lending, crowdfunding, they're almost acting like banks, but they're not regulated in the same way as banks, not as tightly anyway. And there's been a few of these companies have got into trouble. So there are some in some financial sectors they believe that this could cause a problem in the future. That these underground banks or shadow banks, in other words, could cause the next financial crash. Now, we don't know if that's really going to happen. It's just some people are predicting this, that these shadow banks, and they're not just controlling a few million, they're controlling billions and trillions and moving money around in a way that perhaps would be different under the banking system. It's about 12 years since the last banking crisis, and these crises can happen just because of a loss of confidence. In the last banking crisis, the banks were lending against security, which were loans, which were subprime loans that hadn't actually defaulted, but suddenly the confidence that 1 minute they were worth X amount, X amount of billions of dollars, and suddenly the market said, no, it's not worth that, it's only worth half that amount. So suddenly they're calling in these loans, or the security is not thought of as the same. So in other words, if a bank today, and this happens to people, if a bank has lent you money on a property worth £100,000 and they've lent you £70,000 or £80,000, that's a 70 or an 80% loan to value. But if tomorrow there was a property crisis and the bank then suddenly feels, well, that security that we thought was worth £100,000 is actually only worth £80,000, and you owe £80,000, therefore we're in a panic now, so we want our money back, or we want you to reduce it down to 80%. We want you to pay £20,000 or £30,000 off that loan today. And that was happening to people with large portfolios. So as this confidence just can disappear with a crisis, with a financial crisis, with coronavirus, who knows? It could be anything that can trigger a sudden loss of confidence in the market, because the markets operate on confidence, on trust, and all sorts of other things that are just related to things like we are lending to this government, will we get this money back? Even money itself is not, although it's a bit of paper in your hand, money is more like a promise to pay. It's only as good as the government that's issuing that money. When Zimbabwe a few years ago kept on printing money for like 5 years, their money became so worthless that it would cost 6 million Zimbabwe dollars to buy an egg. it just got ridiculous until they then come off of that currency and peg their economy to a dollar. I don't know how they actually got out of it, but this happened in Germany before. This has happened in Argentina a couple of times. So it's all about confidence, and as long as the market is confident, then things can move forward. Like the property market is very much like that. If people feel confident in the market, they feel confident that prices will remain stable and go up, then they keep buying properties. They want to move. They want to invest in property. But if the confidence is shaken, then all hell breaks loose basically. And this I remember a few years ago when one of the banks said they had no confidence in any property in Docklands, which is now Canary Wharf. It used to be just called the Docklands, which was just growing up at that time in the 80s. And I think it was the Alliance and Leicester Bank said that any property in the Docklands is not suitable security, which was just utter nonsense. In fact, in those days, you could buy a cheap property overlooking the river fairly cheaply, which is now maybe worth $1 million. But the building society at that time thought, oh, it's not suitable security for us to lend on. So their confidence in that had gone. At one time, it was thought that it would take 20 years for the property market to recover, which was, again, a lack of confidence. So I don't think N26 closing down is going to cause any great shakes in the market. But, we don't know when the next financial crisis will come. We know that several central banks, such as the European Central Bank, Bank of Japan and the US Federal Reserve, are still printing money or pumping money into the economy to keep the economy up. And they can do that because they just literally create money out of thin air. So those dollars that they create are as good as knowing that the government behind those dollars are good for that money. So, they're pumping money into the economy. So I don't think the underlying problems from the last financial crisis have really been sorted out and have really been put to bed. There's been no real restructuring going on. Yes, the banks were bailed out over 10 years ago because the government felt that the banks were too big to fail. When RBS got into trouble and they'd just taken over Amro Bank, and they were in trouble. They were effectively had gone bust. They didn't have any capital left because the confidence in that market had evaporated, and whereas the banks would lend to each other to keep liquidity going, that just dried up, and everything just dried up, and the government had to bail out RBS because if they had not done that, the consequences would have been disastrous for the country. So they had to bail them out, and that has caused problems ever since. But I think that problem that existed back then, it has not really been fully sorted out. It has not been fully sorted out, and there's still trillions of debt. There's still a lot of people in debt, and there's still a lot of people going out every day buying new cars on credit. So what's the advice? How would you survive the next financial crisis? Because there is always one every 10 years or so, and it's been 10 years since the last one. So how will you survive? Well, the answer is you need to be liquid yourself. You need to have savings. You need to have money in the bank that could cover you if you lost your job or if business took a downturn. Because if you can survive these things, then normally everything's okay. Like if your house has gone down in value, but you keep paying your mortgage, then what's the problem? Just your house is worth less than it was. Okay, so maybe you owe more in terms of loan to value, but if you're still in the house, you're just paying for it. What's the problem? It's only when you can't pay that mortgage, usually, that they'll come back and take that house from you. So I would say not to get yourself in so much debt that you could only be 2 or 3 paychecks from disaster and financial ruin. Make sure that you've got 6 months payments, monthly pay, whatever it costs you to run your life per month. You should have 6 months worth of that in the bank as a reserve. So if your life costs you £2,000 a month, you really want to have £24,000 in the bank. That if anything goes wrong, if you're laid off, or your business goes down that you're running, then you have money in the bank to survive those periods until you can regroup and rethink things. So that would be the first thing. The second thing would be not to tie yourself up with too much consumer debt. Try and pay down your debt so that because this consumer debt can literally consume you. That the payments are much higher than mortgage payments. So small loans, credit cards, car payments are usually based on quite high interest rates, quite high payments. And, if it starts to go wrong, you miss one or two payments, it can all tumble down like a row of dominoes very, very quickly. And then your credit rating is of course, ruined. So two tips there really: have savings in the bank and also pay down your debt, and don't take on too much consumer debt. That's 3 really, isn't it? So I've rolled that into a 2. So 1 is have some savings in the bank, maybe at least 6 months worth of living expenses. 2, pay down any consumer debt like credit cards. And 3, don't borrow so much on consumer debt such as cars and credit cards and all these sorts of things that can really tie you down during a recession. Because we forget that, when times are good, we think times are always going to be good. And we forget about the last recession when times were tough. And it's the people that can ride out those recessions that tend to do okay. And, the only way you can do that is to have savings and have some backup in the bank, just like any business would need a backup during a financial crisis. So that's all for today. We also heard that the government has said that they are going to go ahead with HS2 high-speed railway from London to Birmingham. It's going to cost 85 billion or maybe even more. That's going ahead now. But mind, we've had about 6 announcements from various governments saying there's a high-speed railway. So now it is definitely going ahead. It was under review, which I personally think it's a bit of a waste of money. But billions have been spent on this already. I think it's 10 billion has been spent already, and they already employ 5,000-6,000 people in the UK, and that would just be wasted money. But I think they've got to do something to make sure that they don't just pile through ancient forests and woodland. And one of the things that's costing so much is that they do look at the environment. They've got huge tunnels going through the Chilterns and this sort of thing. So anyway, it's going ahead. It's the biggest infrastructure project in the whole of Europe, and it will create tens of thousands of jobs. If you're not directly working for them, there'll be some trickle-down effect of construction work, catering, engineering, all these sorts of things that will be creating jobs for years to come, for decades to come. Because when it gets to Birmingham, it's then going to branch off to Manchester and to Leeds. So we'll have a high-speed rail going all over the country. I don't know, still don't know why they couldn't improve the existing lines, because there's already a train going to Birmingham. And there's already trains going to Manchester. I've been on one. It takes a couple of hours. It's quite a nice train. What is the problem? But anyway, I can't do anything about that. That's one of those bigger things. But it will mean that more money is pumped into the economy, and that's the first start of perhaps putting in more investment into the north of England to revive those areas, so that we get our economy is not so London-centric and London-based. So there you go. Thanks for listening. I hope this has been interesting for you. And if you have any comments, please make them on there on Facebook, if you're watching me on Facebook Live, or on my blog, and which you can find on moneytipsdaily.com. You can also find my podcasts on Apple or Stitcher if you want to just listen while you're going to work or whatever. So thanks for listening. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate, and enjoy more money. Thank you.